Fine. Okay. Well then, hey Bill, would you like to go ahead and get us started?
Yes, I would. Thank you, Greg, and thank you, everybody. Thank you, TechSoup, for working with us again today. We're doing how to read your financial statements. Um, Greg has never taught a full webinar on this topic, and he's very excited. So we appreciate you guys being here. We have Paige Hudson Garcia from our tech support team. She is here to help answer questions in the Q&A box. And I know that Aretha will be sending out an email within 24 hours or so with the link to the recording and the slides. So you will be getting those. Um, there'll be a couple of poll questions. If you don't see that, you might not be in the Zoom meetings interface. Um, and with that, I'm going to introduce you to today's presenter. Greg Bosson, CPA, has his own full service accounting firm in Atlanta, Georgia. He created QuickBooks Made Easy for Nonprofits in the year 2000. Doesn't sound so futuristic anymore, does it?
It doesn't.
Y2K, uh, almost 26 years ago, and to teach nonprofits and houses of worship how best to use these products for their specific needs. He heads up our tech support team that Paige is a member of. He handles most of our consulting. I want to say Paige handles almost all of our migrations, QBO migrations, and through TechSoup, and we appreciate that. Greg also works with national clients and partners like TechSoup and GrantStation and NPQ, and he is the author of our Essentials and Beyond the Essentials streaming training. He created that as well. And with that, I'm going to turn it over to Greg Bosson.
All right. Thank you so much, Billy Boy.
You're welcome.
All right. So let me go to the website first. Go ahead and put in the chat. Is there anybody that's not seen me teach a webinar before? Anybody not seen me teach a webinar before? Hey Brenda, I'm Greg. How's it going? Anybody else? Oh, Maurice, Emily. Okay, cool. There's a ton of, not a ton, but a few of you. So just to kind of repeat what he said, so I'm a CPA. So, like, I'm the dude that has an accounting firm. I focus just on nonprofits. I do about this year, we're going to do 42 audits, by the way, believe it or not. We're going to do about 175 990s. And then we have a ton of clients that we are doing accounting for, like monthly bookkeeping, all over the country for all this stuff. And then the other thing that I do is I have QuickBooks Made Easy. And so right now you were looking at the website for QuickBooks Made Easy. Can everybody see the website, QuickBooks Made Easy? Let me get rid of this pop up here. Everybody see that? Okay, cool. And although, can everyone hear me? I've got this fancy mic. I just want to make sure everybody can hear me. Hey, Gary, how's it going? Okay, cool. So, this is not your normal webinar where you're just trying desperately not to fall asleep and you're checking your email. Brandon, LaDonna, I'm going to be speaking and asking you questions as we go through. Just kind of letting you know to keep on your toes because I have a list of every single person that is in this webinar. We've got 139 people. So, you never know when I all of a sudden might say something like, Carrie Grover, front of the room. Carrie Grover, front of the room. Are you listening to me? Carrie, 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 Carrie Grover. See, Carrie's here, but doing something else. Carrie. Oh, there you are. Okay, cool. Oh, she raised her hand. No, put it in the chat. Oh, it's not Grover? It says Grover. C-A. Oh, there's another Carrie. Okay. We got Carrie Grover. All right, so cool. So I'll be asking you questions, blah, 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 blah. We only got an hour. Okay. So this will be nice and easy. Nothing too stressful here. But I did kind of want to say for those of you that are new, um, in addition to the accounting firm, I teach people how to use QuickBooks around the country, but only if they're nonprofit organizations. And the website, QuickBooksMadeEasy.com, is where you go. We do have a webinar series coming up next week. And if you go under courses and training and live webinars, you'll find out about it. It's a six-pack series. We're doing two courses a day. Each course is 2 hours, and it's six sessions all together. If you click on here to get the tickets, you can read all about it, and I think that you should. We are doing how to design a perfect data file and how to fix your current data file once you have decided the right way to set things up. That's day one. Then, is there anybody that has payroll using QuickBooks to do payroll? Anybody using QuickBooks to do payroll? Put it in the chat. Anybody using QuickBooks to do payroll. So there has never been in life before a webinar on using QuickBooks Online Payroll if you are a nonprofit, and now there is. It's on day two. So, step by step guide. Even if you're not using QuickBooks Online Payroll and you're thinking about switching, you should go to this thing because the best time to switch into a new payroll service is January 1st. And it does make life a lot easier because you don't have to enter a big fancy entry into your QuickBooks to record payroll like you do if you're with ADP or something. So, we're going to do that on day two. And then day three is all about the modern reporting function and leveraging AI in QBO. I have a question, by the way, about that. I'm in QuickBooks right now. How many people have encountered the new reporting? There's classic and the modern. Y'all know what I'm talking about? The classic and the modern. And you know how everybody hates the modern because it's changed. When you run a report, it gives you a modern. See, we could switch to the classic view, but there's the modern view. Anyone tried this? It's very challenging. It's very complicated, and we're going to learn all about it. But enough of my advertisement here. Um, let's move on to what we're covering today. Um, let's see. These are the people that are teaching the sessions next week. But anyway, and I'm giving you discounts too. But all right. So what we're going to do is today is all about how to read a financial statement. I'm going to spend probably about 5 minutes just kind of giving you kind of a definition of accounting and how it works. And then we're going to learn how to read financial statements. Now we're going to do it for an internal financial statement that I'm going to get directly out of QuickBooks. Then we're going to do, and my goal, by the way, is when I say how to read them, I'm going to tell you what you should be looking for when you look at a financial statement. What does it tell you about your own organization? And more importantly, what others think when they look at it, like funders and stuff. So I'm going to tell you from the viewpoint of yourself as somebody who's working at a nonprofit, but also from the viewpoint of a funder. All right. So, and first thing, I'm going to do this for your internal financials, which you wouldn't necessarily show to a funder, but then I'm going to do it for an audit. How many people get audited here? Put it in the chat. Who gets an audited financial statement every year? All right. So I'm very excited about this because I'm going to show you what your audit is telling you. A review is basically the same as an audit. So I'm excited about that. And then finally, a 990, which is the information return. Now, I don't know if you know this, but your 990 and your audit, okay, are public information. All right, which means you can't hide them from people. As a matter of fact, does anybody know where you can get a 990? You can look up a 990 for anybody if you just know the name of the organization. Um, does anybody know where you go? You can look it up on the IRS website. That's right. And you can also look it up on, there's another website, GuideStar, where you can go. Okay. Now, somebody said Candid. I haven't tried Candid yet. So we're going to go to the IRS website when we get to this part of the webinar. We're going to look up a 990. We're going to look up one of your 990s. Okay. So I need somebody in this webinar to volunteer to let me look at their 990. Now, it has to be somebody who makes more than like a couple of hundred thousand a year because I want to do a full 990. If you do less than 50,000 a year, you just have to do a little postcard. So, um, all right. So that's what we're going to do. So be thinking about whether or not you'd be comfortable showing your 990 to the public here and letting me review it, even though everybody gets to see it anyway. So I'm seeing some people putting the name of their organizations up there. So Anthony, I think you spelled sustainable wrong. Uh, or maybe you don't. So, all right. So everybody can see me. Everybody can hear me. Let's move. Y'all ready to go? I'm going to take a sip of water. You let me know if it's okay for me to start. All right, let's do it. All right, so here we go. So, just a real revisit. I know I've done this before for people that have seen me teach before. What is accounting? Accounting has the process of entering transactions, checks, bills, deposits, invoices for pledges, grants, tuitions, all your transactions, entering them into an accounting system, usually QuickBooks for most nonprofits. But anyway, so that they can appear on reports. Now, when you enter transactions, they don't appear on reports immediately. They go through a list in QuickBooks called the chart of accounts list. And then from there, the lines on that list make up your financial statements. And there's really only two financial statements that all transactions appear on. And that is the balance sheet and the profit and loss. So the whole goal of accounting is you enter transactions or add them from your bank feed if you're using bank feeds with QuickBooks, and then they appear in your chart of accounts. And then from there, the lines on the chart of accounts, they make up the two financial statements, the balance sheet and the P&L. And you give the balance sheet and the P&L to the board of directors. The P&L, you usually give it to them compared to a budget, and you analyze your organization. You do your taxes, you do your audit. So that's accounting in a nutshell. Everybody cool? So now, thank you so much, Emily. I was going to say this. If you are a nonprofit, and I'm going to go right into QuickBooks now. If you are a nonprofit, I'm going to go to reports and I'm going to go to standard reports. By the way, before I go any further, who here is not using QuickBooks as their accounting system? If you aren't, tell me what you're using. If you're not using QuickBooks as your accounting system, Alicia's using Sage. Okay, that's fine. Data Pro, poor Bruce is using Excel. Samantha's using Blackbaud and Financial Edge. Sage. Okay, so Bruce, you're not really using the accounting package at all. But anyway, everybody else is using QuickBooks. So, oh, Power Church. Never heard of that, Sarah. So, I'm going to be using QuickBooks as I teach because almost everybody uses it. Andrew's also using Excel. Can't really create financial statements from Excel unless you manually do them. But anyway, Melanie is like everybody else using QuickBooks. But anyway, so somebody had said, I think it was Emily, when you go to the reports in QuickBooks and you click standard, you'll get a list of your reports. And depending upon how you set your books up, this may not be called a balance sheet. It may be called a statement of financial position. And this may not be called a profit and loss. It may be called a statement of activity. That's how nonprofits call it, but it's the same freaking thing. And if your system calls it a balance sheet and somebody else's system calls it a statement of financial, it doesn't matter. It's the same freaking thing. All right. So don't worry about that. All right. So, I think I actually put it up here. Yeah, so here's the balance sheet, here's the P&L. And so I'm going to pull both of these up and I'm going to kind of read them for you. I'm going to tell you what to look for, okay? And I have slides that kind of list out the things that I think are really important for each one, but I'm just going to do that. I'm going to go ahead and read the internal financial statements uh, for you, and then tell you what it is you need to look for when you're reading them, and then I'll just do this all in QuickBooks. Okay. So, all right. So let's say, well, y'all tell me, when does your fiscal year end? December 31, June 30, September? When does your fiscal year end? Just kind of curious. Yeah, a lot of people are December 31, and then number two is June 30, and then occasionally we'll get somebody that has something else, but usually it's June 30 or December 31. So this nonprofit that I have, this sample ends on June 30. So I'm going to click on the balance sheet. Now, you can look at a balance sheet at the end of every month, but I'm just going to go ahead and make it as of last fiscal year, which ended June 30 of 25, last fiscal year. All right. So I'm going to read this statement and I'm going to tell you what you should be looking for when you read the statement. Okay. First of all, what is a balance sheet telling us? Well, what a balance sheet is, it's it's got a top half and a bottom half. The top half, 376,000, equals the bottom half, 376,000. That's always true for a balance sheet, which again might be called a statement of financial position for you, but it's the same thing. The reason why it's called a balance sheet is because the top half always equals the bottom half. The top half is made up of something called assets. Assets is basically the stuff of value that you had in your organization on the date of the report. So this date is June 30, 25. So on that date, it's like somebody took a camera and went click and they took a picture and it shows you everything you have. That's the assets. And the bottom part is everything you owe. That's the liabilities. And then the difference between what you have and what you owe, which is equity. In the old days, nonprofits called equity fund balance. All right. But it's the same thing. Okay. So you'll hear another word called retained earnings. That's the same thing. All right. You'll hear somebody say net worth. That's the same thing. This bottom section, which is called equity here, is simply the difference between what you have, your assets, and what you owe, your liabilities. Now, what do you think, guys? Would you want your equity to be positive or negative? What do you think? What do you think? Yeah, you'd think you'd want it to be positive because you would want to have more than you owe. Okay, I think I actually have I kind of skipped past it here, but if you look at this, see, assets minus liabilities equal equity. Assets is everything you have, liabilities is everything you owe, equity is the difference between the two. You certainly would like to have more than you owe. And that's the very first thing I want to point out when you're looking at your financial statements, and you should absolutely be looking at a balance sheet at the end of every month. But it's going to tell you what you have, $376,000, what you owe, $43,000, and the difference, which is 332. All right. So that's a positive number. So that's the first thing you want to look at. You want to make sure that you have more money than you owe. Because if you owe more money than you have, then your organization has way too much debt compared to your assets. Okay. Now that's another thing that I would do next. I would look at your total debt, the total liabilities, and I would divide it into your total equity. And that's called a debt to equity ratio. Okay. I would take whatever total liabilities are at the end of the month, and I actually put a calculator up here so you can see me doing it. Okay. I would take, what is it, 43,377 and divide it into total equity, which is 332,972. And I'm going to click equals. So it's 0.13. So that's 13% basically. So how do you know whether that's unusually high or unusually low? So what I did was I gave you in your deck, let me show if I can get back to where this is. Um, I gave you debt to equity ratio. So anything that is less than 0.5, and what was ours? Ours was 0.13. So it's certainly not less, but if your debt to equity ratio is less than 0.5, that's great. That's very conservative. Typically, for organizations that are really small, it's going to be like 0.5 to 1. And then if it's over 1, then you're highly leveraged. Now, this is actually, I'm sorry, it's less than 0.5. We're at 0.13, and it's 0.5 is very conservative. So this is good. The debt to equity ratio is really low. Okay, so that's very conservative. That means we don't have very much debt at all. So that's good. So that's something that I want you to look at. So let me see what else I'd like you to check. Debt to equity ratio. We want to make sure equity is positive and not negative. Now, I like to look at the cash position versus liabilities. So, what I want to do is I want to see how much cash do I have. So, I have $188,000 of cash. And what are my total liabilities? My total liabilities are 43,000. So I've got 188,000. I only have 43,000 in liabilities. So that is great. I know that if the sky fell, I could pay everything off and I would be okay. All right. So Chris wants to know, does equity equal the same thing as net assets? And it does. I'm sorry. Nonprofits call equity net assets. I should have said that. Okay. So Sherry says that she was told that the balance sheet will not equal if your accounting system is based on cash and not accrual. That is completely wrong and a lie. The only way that your balance sheet won't balance is if your books, if your accounting system crashes. So that's not right, Sherry. I don't know who told you that, but that's wrong. Okay. How long should cash cover liabilities? In other words, how much cash should you have? Well, ideally, you at a minimum want to have at least enough cash to cover your payables. Your long-term loans, I'm not worried about, but you want to have cash that covers your bills and whatever other liabilities you have, like credit cards and stuff. So, all your current liabilities. Now, if your cash isn't as high, it obviously is here, as your liabilities, then look to see if you have any receivables that are going to come in really soon. So, in other words, that's a current asset too. So if you add your bank monies and your receivables, you add them together, this would be 188,323. As long as that's more than your payables and your other current liabilities, you're probably fine. Okay? So all right. So Melanie wanted to say, is this the same as the rainy day fund? Not really. I'm going to tell you what the rainy day fund is later. Okay. So anyway, that's all I'm really interested in with the balance sheet. I want to make sure I don't have too much debt. All right. Um, and I want to compare the cash and possibly the receivables to my payables and my current liabilities and make sure that's more. I want to make sure that my equity is positive, and sometimes it's not, and then that's when you need to start worrying. All right. All right. Is the term receivables and income the same? No, no. Income is all the money that you get in, and that appears on a profit and loss. That's a statement that we haven't looked at yet. Receivables are money that you have been promised that you're going to receive, like a grant that you've been promised you're going to receive that you booked, or perhaps you have tuitions or registrations and you invoice for them and you haven't gotten them yet. That's what a receivable is, money that you have left to receive. So receivables are part of your income. They're the part of your income that you haven't gotten yet. Okay. Do reserves show up on the financial statement? So I don't know what you call a reserve, but you have to tell me, Laura, what you think a reserve is, and then I will tell you whether or not it appears on the balance sheet. So why don't you type that up, Laura? Okay. Uh, so let's see. What else do we have? Why would net income be negative? This line down here, if this is negative, that means that you have actually spent more money that you earned in the particular year. This net income line is simply the number that equals the P&L net income. Let me show you. I'm going to duplicate this window and we'll move on to the P&L because it sounds like you are wanting me to go on to the P&L. Now, Maurice, receivables is more like promise money. Income is money the organization already has. That's also wrong. Okay, Maurice, income is all the income, whether you have it or it's promised and you haven't had it yet. Okay. Receivables is the income you haven't received yet. It's a subset of all your income. Okay. So if your books are on the cash basis, Kathy, then you'll not have any receivables. And this is a good time to tell you it's really hard to analyze your financial statements if you're not booking your receivables and your payables, period. Okay. All right. All right. Let's go on to the P&L. So I'm going to pull up a P&L. I think I have it in my custom reports. P&L. There it is. All right. So here's a profit and loss. And this has the income and the expense. But I want to start by looking at the bottom. You see that income is 28,716. All this is it's kind of giving you a hint at what's on the P&L. Okay? So the balance sheet is everything you have, everything you owe, and the difference. The difference is 332. And that's kind of like what's left over, what you can use. And then you also have to understand that of that 332, 28,000 of it came from the current year. The rest of it came from prior years. All right. So there is one more thing I do want to point out that's pretty important. All right. The assets is everything you have, the liabilities is everything you owe, equity is the difference. Equity is the difference, but this 332, it's not like all of it is unencumbered. Some of it is restricted and some of it is not restricted. So that's why if you do things right, you'll have a donor restricted portion of equity and an unrestricted portion of equity. And in this case, we have a board that also designates money. So the way to read this is 330 we've got 332,000 of equity. It's basically our assets minus liabilities. But of that, 83 plus 10 is board. So 93 is restricted. So the unrestricted net assets we have is 210 plus the current year net income. So around 240,000. So it's important to understand that you may have a lot of cash and your organization may be in the positive, but you want to make sure that your unrestricted net assets, that's the real money, that's the rainy day money. Whoever it is was talking about the rainy day money, that's the rainy day money. The stuff that's here is restricted for the future. It's encumbered. It's something that it's restricted grants, restricted funds. We have to spend it on specific things. This is your rainy day fund down here. All right. Is everybody cool so far? I'm going to look at the P&L. P&L is easier. It's the money coming in and the money going out. Pretty simple. Okay. Hopefully, this is a positive number, but you'll be able to see the positive number on the balance sheet anyway. But hopefully, this is a positive number. But what should you be looking at when you look at the income and expenses? What should you be looking at when you look on a P&L? Okay. I'm going to stop for 1 second. Somebody had a question about a tag report. So tags, people that use QuickBooks, if they aren't using tags now, they can't use tags in the future. So it's not really appropriate for me to teach about tags. Okay. So I won't do that. Bonnie said, should the balance sheet be run for the previous month only or year to date? So, Bonnie, think about this with me. If I made this balance sheet as of just the previous month, June 1 to June 30, it's going to give me the balances as of June 30. If I say it's from July of 24 to June 30, it's still going to give me the balances as of June 30. See, it doesn't really matter what the from date is because this is a picture of what things look like as of June 30. So it's quite irrelevant. It doesn't matter. Does that make sense, Bonnie? Because the only date that matters on a balance sheet is the to date. All right, cool. So the P&L. So the P&L is all the money going in, the money going out, okay? And hopefully that's a positive number. Now, I did want to say what I wanted to give you some other ideas on how you would look at a P&L. One thing I like to look at is gifted money versus earned income. First, you want to look at whether you're making or losing money, but you also want to look at gifted money versus earned income. Gifted money is donations and grants and maybe contracts from the government that are basically grants. So it's stuff like individual, corporate, foundation, and government grants. So you want to look at that as compared to earned income like program fees and membership dues. So if we added 170 plus 30 is around looks like around $300,000, or maybe we'll say 290,000 in gifted money, and we have about 15,000 in earned money. So this organization, most of their money comes from gifted, not very much comes from earned. Is that a good thing or is that a bad thing? It depends upon your organization. Okay. If you are a voluntary health and welfare organization, you're basically trying to help children, you have contracts with the government or whatever, and people give you grants, you're not going to have very much earned income. But if you're like a theater or a school or a membership association that has an annual conference, then you'll have earned income. So if you have some earned income, what you want to look for is you want to have at least a third of your money coming from earned income and two-thirds coming from gifted. Now, I know that the percentages are going to vary wildly. And so that's just kind of a general rule. But what I'm telling you is that when funders look at your stuff, they're going to want to look for diversified sources of revenue. They don't like giving to a nonprofit who is getting all their money just in one way. All right. They want to be able to look and see, oh, they're getting some of their money from gifts and some of the money they're earning, they're diversified. Does that make sense? Does that make sense to y'all? Does that make sense? Okay. It's just a good idea to diversify revenue sources. Okay. So that's another thing that you want to look at. The last thing I would say is you want to take a look at your expenses and you want to compare them to total income to see like how much of your income has to end up being spent on salaries and wages, you know? So I can actually click on this compare button in QuickBooks and I can say I want a percentage of income right there. So what that does is it adds a percentage column. So total revenue is 100% and 33% of it comes is spent on salaries and wages. So what we're saying is, well, when you add in payroll taxes and health insurance, it's more like my whole payroll is 40% of my total revenue. So is that good or is that bad? So I looked, this is a general percentage, but you're going to see most nonprofits, their salaries, their payroll is around 35 to 50% of their total income. That's normal. Okay. So I'm thinking at least a third, maybe more. Okay. So that's something. Most nonprofits, the biggest expense there are is going to be salaries. Okay. So we've got another half hour left, and I want to analyze an audit, but I'm just going to end by saying the balance sheet and the P&L. Okay. You look at those two things, just kind of reviewing the balance sheet. You make sure that equity is a positive. You see how much of equity is unencumbered, the unrestricted portion. Now, if you are doing your accounting correctly, then this number will be right. If you're not, it'll be wrong because you got to do journal entries to make this happen. Okay. And then you want to look at your debt to equity ratio. You want to look at 43,000 divided into 332, see what that is. Okay. Then you also want to look at how much cash you have and possibly receivables as compared to your current liabilities. Basically, your current assets is cash and receivables, and your current liabilities is payables and what other liabilities you have, like credit cards. And hopefully, you have more current assets than you have current liabilities. Okay. How important is it to compare the P&L to the budget? It's vital. You should do it every single month. We teach this in our trainings. Let me see if I have a budget that I can show you. Um, I don't have a budget to actual in this data file, but you should definitely compare a budget to actual every single time you look at your financial statements. Okay. Now, those are your internals. Let's see. Bonnie says her salaries are 55 to 60% of income. We provide services versus goods, so salaries exceed as a 50%. Is that good or bad? That's fine. I said 35 to 55%, so that's not awful. Don't worry about that. Okay. For funding that is prepaid for multiple years, Laura says it shows up as a liability. This really skews our debt to equity ratio by a lot. Is there a better way to record this? So, funding that's prepaid for multiple years is not supposed to be a liability. That's not GAAP. That's not GAAP. Okay. Um, Katie says, could you explain the it's supposed to be put into the P&L, not on liabilities. Katie, could you explain the review process of a P&L for nonprofit charities who aren't receiving grants and instead primarily have dividend and interest income? The only way to really analyze that, Katie, is to compare it to a budget. If most of your money's coming from interest and dividends, you're not getting any grants, you're not getting any program revenue, you also run the risk of creating a problem for your tax exempt status. Nonprofits are generally not supposed to just sit around and make money on investments, Katie. Okay. There's actually a test for that on the 990, and we'll look at it when we get to the 990. So, what I want to do now is I've looked at the interim financials. Now I want to look at an audit. Okay. So, I'm going to take a sip of water. Is everybody doing okay here? Everybody doing all right? I just want to stop for a second. I don't want to overwhelm anyone. Okay, everybody doing good. All right. So on an audit, and again, how many of you get audits done? Go ahead and put it in the chat. How many of you have an audited financial statement or a reviewed financial statement? Okay, cool. So this is where an outside accountant comes in. They either audit your books or they review your books and they give you a report. So we're going to take a look at the report, and I've got one pulled up here. Now, I will tell you an audit report and a review is public information. If somebody asks for it, you're supposed to give it to them because you are a public charity. So it's not something to be hidden. Okay. Everybody should have access to it. Now, what I'm going to do now is I'm going to spend about 15 minutes, about 10 minutes, going through when I'm done with an audit. What I do is I have a meeting with the board of directors and I go through the audit with the board of directors and I explain to them how to read it and I explain to them what it's telling me about the organization as well as what it's telling funders about the organization. So I'm going to go ahead and do that. But before I do that, Laura is not understanding what I was saying about prepaid money. You said it should not show up as a liability. That's true. It is not generally accepted accounting principles to do that, Laura, unless it's a conditional grant and I need to speak to you about it. You have tech support, Laura. I assume you have tech support with me. Laura, do you have tech support? Oh, now she understands what Gab is. Okay. Well, maybe I don't need to worry about that too. Okay. Well, you should get tech support with me. All right. Then we can really talk about it. So here is an audited financial statement. And what I'm going to do is I'm going to go through this as if you are a board of directors and I'm reporting to you. Okay. So here it is. So what the audit has, it has a report. Now, a review, it'll say a review rather than an audit report, but it's basically like a Word doc. It's like a letter. And then the financial statements and the footnotes are after it. The report is right here. And there's a bunch of boilerplate, cover your butt language. But the thing that matters on this report is this first paragraph right here. Well, actually, the second paragraph. In our opinion, the financial statements referred to above present fairly in all material respects the financial position of, and then the name of your organization. Now, when you have that, what that's called is that's basically the auditor saying the report and the statements, we think they're good. Okay. We think they present fairly in all material respects the financial position of the organization. We think it's good. That's what you want. Okay. So that means that readers can trust the numbers. Now, it's not always definitely going to be right because we're human. We miss things. So that's why there's a bunch of boilerplate cover your butt stuff saying we don't know for sure, but in our opinion, it fairly presents all materials, all material fairly presents your financial statements in all material respects. Okay. Then you've got the financial statements. It's the same freaking financial statements. We have the balance sheet, which is a statement of financial position, and then we have the P&L, and then we have a few other statements which nobody looks at too much except for one. So, what I'm going to do is I'm going to tell you what to look for here. What you should look for here is the same freaking thing that you should look for on your regular financial statements. You should look at the balance sheet. Now, you'll notice that there is a without donor restriction and a with donor restriction column and then a total. Don't worry about the without and the with. Right now, I want you to just look at the total, okay? And do the same things. We want to look and see, is it positive? Yeah, net assets are 2.76 million. That's great. We can look to see how much of those are without donor restrictions. 2.248. That's great. Okay. We can also look to see what our debt to equity ratio. We only have 65, 70, it looks like 76 liability, 2.7 in net assets. We are really good. We have very little debt. It's great. Okay. And then we want to look to see, do we have cash and short term? All of our current assets are 1.49 and our current liabilities are only like 65,000. We're great. Okay. That looks good. Somebody says, just to confirm that your firm does the audit, single audit, and the 990. My firm does an audit and a 990. We do not do single audits, period. Okay. All right. So I'm going to come back to this column in a second, but I'm going to go back to the P&L. It's the same freaking thing as it is in QuickBooks. First thing you want to look at, see if we're negative or positive. We're minus $41,000. Okay. So with an organization that grossed 1.7 million, we're minus 41,000. We're basically at break even for the year, which is fine. Okay. We also want to look at our public support. That's our gifted revenue versus our earned, which is 1.081, our earned revenue. They actually have more earned revenue than they do gifted revenue. And we want to look at the percentage, but I mean, I don't necessarily need to do the math. You can tell, um, well, I guess I could do it, but it's like, what is it, like 40% public, 60% earned? So that's fine. For an organization that gets a bunch of funding from Medicaid, these people are helping populations of people that are on Medicaid. They're getting Medicaid payments and providing room and board. So this makes sense. This is actually an organization that's getting a lot of money and earned revenue because they're helping a population that is poor and is getting government funding. But look at how much gifted revenue they have. I feel really good about this organization because they're not completely reliant on the government. This looks really good. Karen, if you want to do an audit, you should do an audit every year. Okay. So now, I haven't talked about this before, but the expenses. If you notice, the expenses here are broken into three groupings: program, management, and fundraising. When it comes to nonprofits, funders want to know not only what the expenses are, salaries, travel, supplies, but they also want to know how much is going for programmatic work versus how much is just general overhead, like the cost of doing the audit and the cost of doing the accounting, versus how much do you spend trying to raise more money, like the cost of taking donors out to lunch, the cost of the development director's salary, the cost of doing an email campaign, the cost of your donor database CRM. Okay. And wouldn't you want, if you were to give money to a funder, wouldn't you want most of their money being spent on programmatic stuff, actually helping the population they're trying to serve, as opposed to overhead or fundraising? So, what you want to look for is you want to, in the audit, you want to make sure that your program is at least 75% of your total. Okay, so I'm going to do the math here. I'll just do it on a calculator off the screen. But 1.476469 divided by 1,831,815, and that's 80%. So 80% of the expenses are spent on program, and that looks really good. Okay. So, Shannon has a very specific question that I will do later. Probably I have a whole thing on in-kind contributions, so I don't really have time to do that now. All right. So now the thing about this is, whereas on the typical P&L in QuickBooks, let me go back to QuickBooks. Here's the P&L. I'm going to go ahead and get rid of that comparison. On the P&L, when we looked at the expenses in QuickBooks internally, we saw what they were: salaries, payroll, rent, blah, blah, blah. But when I look at the audit, it just tells me them in these groupings, and I don't get to see what they are. That's for this. That's why on an audit or review, you're going to see this third statement called the functional expenses, and it gives you salaries, fringe, depreciation. It gives you those same categories that are in QuickBooks, but it's broken up into this grid so that you can see, this is how much was for salaries, this is how much for fringe, but you can still get a total 1.476, 135, 291, 1.476, 135, 291. Okay. So it's basically the same thing. So you want to make sure this is at least 75% of the total. Okay. We talked about the balance sheet. The only thing that I want to point out, and this is kind of an important point, then Melanie, we need to delay the webinar so we can talk about in kind, and I can't really do that right now. All right. So, but maybe I'll stay late and do that. All right. So the one thing I want to point out is I want to talk about these columns here with donor restrictions, without donor restrictions. So let me just ask you a question. Is there anybody with a December 31 year end that's going to get some money in December that's for next year? Put it in the chat. Anybody getting money for next year at the end of this year? All right. So let's say we have an organization that's getting $100,000 in December, but it's for 2026. Well, if you put it on the P&L, it's going to make the P&L look really large. But generally accepted accounting principles requires you to do that in most cases. So in the audit, they put the revenue that's for a future year in this column called with donor restrictions. So this 11,000, we don't have very much here. This 11,000, this is money that we collected in 25 that's for 26. So what we did, we put all the revenue for the future year here, and then only the revenue that relates to the current year is here. All the expenses are in the without donor restrictions. So that's kind of the auditor's way or the report's way of culling out the restricted stuff that hasn't been spent yet, but yet it still has to be on the P&L from the rest of the real activity for the current year. So this is kind of like saying, if you look at total revenue, 1.786, that's what we spent, that's what we earned this year, but we also got another 11,000 in that's earned for next year. But we have it all in this first column, and then always the expenses for your organization will be in the without donor restrictions column, because once you spend money that you is restricted, then it's no longer restricted because you spent it. So you're always going to have all of your expenses in the unrestricted column. We have 1.831, and you're going to have only the revenue that is related to the current year. Okay. Spending for the current year is going to be here. So then, if you really want to know how you did, you don't look at this minus 41 over here if you're looking at an audit. You look at the minus 43. This is how you really did. 43 minus 43. Now, funders are going to look at this number because they don't know how to read the financial statement, and then it will include the restricted dollars for future years that GAAP requires us to put on the P&L. But internally, if you really want to know, look here. Externally, unfortunately, this is what they're going to look at. Okay. How are multiple year grants that are restricted recorded? You tell me, Linda. Let's say you got a restricted grant for 10 years. They're going to give you $100,000 a year. Generally accepted accounting principles require that you book it. So where is the 900,000 for the future years going to be recorded, Linda? It can't be recorded as a liability. Jackie, it can't. GAAP says I have to record it in income. So Linda, if I get grant money that's restricted for future and it hasn't been spent yet, what it'll be in receivables. That's true, Donna. But where is it going to appear on the P&L? Is it going to appear in the without donor restrictions column or is it going to appear in the with donor restrictions column? In 2025, I was promised $1 million for 10 years, 100,000 a year, starting next year. Where is that whole $1 million going to appear? It's going to appear in with donor restrictions. That's right. So when you look here, this is going to say I earned $1 million. I mean, it'll be 960,000 because we lost 41. But if you really want to look to see that million's going to be over here. And then this is how you look to see how you really did. Okay. So does that make sense, guys? We've got about 5 minutes more, but I want to look at the 990 real quick. But we'll probably delay about 5 minutes, probably be about 5 minutes late. But does that make sense to you guys? I know it's hard to understand, but basically your entire P&L is in this first column with one exception. Earned revenue, revenue that has not been earned yet, that's restricted for the future, that goes in the second column. Sometimes you've gotten it in advance, so it's in your bank. Sometimes you haven't, and you have to book a receivable. Okay? So I'm good with that. All right. So that's it for the audit. I will tell you one other thing about the audit now that I'll say so. Remember how I said I want revenue to be diversified? What if you got all your money or like most of your money from one funder? Wouldn't that be bad? What happens if that funder stopped getting money? Oh, I don't know. Maybe it's from the federal government, and for some unknown reason, they're not funding your project anymore. Has that happened to anybody? Is there anybody here who had money from the federal government that they're no longer getting anymore? Yeah, Samantha has. So if that's the case, then if you're not diversified, if you're completely reliant on one funder or the federal government or some rich donor, for pardon my French, but your organization is screwed if they stop paying you. So that's why one of the footnotes in the P&L, there's footnotes here, but one of the footnotes to really pay attention to is this one. Concentration of major source of revenue. It's literally a footnote. And what this says here is it says any revenue provider that gives more than 10% of your total public support is going to be listed as a footnote. So in this case, of the 1.788 that they got in revenue, let's see if that's what it says up here. Yeah, of the 1.788 that they got in revenue, it's telling us that 960 is coming from Medicaid. Okay. So if Medicaid got cut, this organization would be screwed. I had an organization that was a dance studio, and they had one donor that was giving like 30% of the money of the organization. Guess what? That owner died last year. So they'll get some money from the estate, but it's a problem. Okay. So we've got about 5 minutes left. Um, uh, I want to talk about 990s. So I want to show you what people get from 990s. So is there somebody, I'm going to go to the IRS's website, and everybody can look at anybody else's 990 at irs.gov. So you go to irs.gov, and I'm going to put IRS charity search in the search window. And then I'm going to go down to search for tax exempt organizations. Either one of these will work. There it's to get to, I keep clicking, I get to the button, and then I can either put an EIN or the organization's name. So, okay, somebody gave me an EIN number. That's the best way to look it up. So I'm going to go to Chris's and I'm going to look at his 990. Now, I know it's a little, you know, like, wow, this dude's going to let us see the 990, but it's public information. So let's see. There it is. This is a school. So right away, I know that they're going to get tuitions. So their earned income's probably going to be a lot. I'll look at copies. Here's their 23,990, and I'm going to click it right here. And here's their 990. So in my deck, I've given you for the 990 some things to look at. You want to look at page one, and this is what funders do too. You want to look at page one. That's the summary page, this page right here. Now, I'm not doing a 990 EZ, I'm doing a 990. The number of volunteers, it's listed right on the front page. I'm shocked that people ignore this and just leave it at zero. Funders look at the number of volunteers. Everyone has volunteers because your board of directors are volunteers. So, at a minimum, those will be on here. We've got 79. So, he was good. They made sure that they stuck a number here. The second thing you want to look at is, once again, earned income 201,000 versus programmatic 3.738. So this is actually, it's at least he's getting some donations. I do wish it was higher, but let's take a look and see if they're making money. Now they're basically break even. They lost 61,000 this year. But look at their equity. It's 2.2 million, okay? Now to see whether or not this is encumbered or not, whether it's restricted, if you go to a little further back, if you go to the balance sheet, you can see 2.177 is unrestricted, only 97,000 is restricted. These people are fine. They got plenty of money for a rainy day. I feel good about them. I might be willing to donate to them. Now, another thing that you funders look at, and they especially look at your 990 if you don't have an audit, is on page 2 of the 990, there is a place here where you can put a description, a program description of what you do. This is where you put your program service accomplishments for your three largest programs. You want to write something that is big enough to give a good description of what you're doing, but is not so big that it won't fit on the page, which is what's happened with this organization. It's so big, it won't fit on the page, so it says see additional data. So then we have to go to a different place in the audit, a schedule all the way at the back, so that we can see an explanation of their programs. Here it is right here. Well, part one, line two. His description should be around here somewhere. Um, it's not any there. I'm trying to see where you don't even have it. I don't even have descriptions here. I don't see it. That's odd. So, oh wait, here we go. There's more supplemental information. Nope. I'm not seeing where your I'm not seeing where your descriptions are. So it probably is somewhere in the return. It may not have captured it because it has to be in a footnote. But my advice to you is lower the description amount so that it can appear in here. Okay. All right. Um, Okay, Suzanne wants to know why funders leave off the grantees list. So there is a Schedule B on the 990, and the Schedule B lists your funders that are over $5,000. Everyone has to do it, but it's not for public consumption. So when you look at the Schedule B, let me get to the Schedule B. Um, you're not going to see any numbers on, oh, the Schedule B isn't included. So it's not that some people leave it off, it's that it's hidden for public consumption because they don't, the IRS needs to know who the big funders are, but not the public. All right. So let's see. We've looked at the number of volunteers, contributions, revenue, whether or not there's a profit, net assets, your program accomplishment. Here's a couple of more things. The executive director's compensation is literally on the 990 on page 7. Okay. When should the 2023 990 show up online? In about a year. The IRS is woefully behind, but I would go ahead and make sure that it's on GuideStar. But look at this. Michelle Shetland makes $53,018, and she makes $47,000 from a related organization. Susie makes 120. Can you believe that we know what these people make? How crazy is that? But it's on here and funders look at it. Okay? So, and then what else do I want you to look at? Oh, by the way, anybody that makes more than $150,000, there's going to be a back schedule. So when you start making more than $150,000, people start taking notice. Okay, just kind of. I'm not saying some people shouldn't make that much, but let's see. Let's see. Whoops. Uh, okay, and then functional expenses. If you don't have an audit, the tax return also has a page where it breaks the expenses out, just like it does on the financial statements. Program, look, program management fundraising. So your funders are getting a calculator out and they are dividing 3.2 into 40. So let's see what that is. That's going to be, that's 80%. Okay. So, all right. One more thing I want to do is I want to go back here and I want to tell you that if you want more training from me, and if you like the way I teach, look at QuickBooks Made Easy. Look at going to this course next week. If you can't make it, you'll get the recordings. You can go to just one or two of the sessions, or you can go to all of them if you want. If you need, if money is an issue, we're going to give you a discount on it. We're giving you $100 off. So instead of 599 for all six, it's only 499. The code is 6PK100. If you just want to go to one of the courses, they're only 149 for the course. They're inexpensive. All right. So, and then I'm trying to think of what else there is. If you've not gotten tech support from us, please get it. Normally, it's $500 for a whole year of tech support. We're giving you $200 off. So it's only $300, $299 for an entire year. This code, TS Tech 299, is where you go to sign up for tech support. You go to QuickBooks Made Easy and you go to tech support. Now, what it is when you sign up for it, you can call us or email us 365 days a year, 24 hours a day. You can email us, call us. We can answer questions either through email, on the phone, or you can request an appointment and we can create a Zoom appointment, take over your computer, and look at the problems you're having with QuickBooks and help fix them. You would click 1 year, you would click online, and then sign up now if you have QuickBooks Online. Now, I know the 3 or 4 of you that have Sage, you don't necessarily need it, but the rest of us would. All right. So, how does everybody feel now that I'm done? Okay. Oh, Andrea says, what level of questions can we get answered from tech support? They can be about QuickBooks. They can be about accounting. Some of them are system design questions. It's all the way from I can't get my bank rec work, a bounce check happened, I don't know how to fix it, to how do I track scholarship funds in my QuickBooks file? It's everything. Okay. Is this a TechSoup service discount? No, this is a discount that you're only getting because you came to the webinar. So you better write it down right now. It's TSTECH 299. TSTECH 299. And it expires this Saturday night. So you don't have time. All right, to wait too long. So, how's everybody feeling? Give me one word about how you're feeling. Happy, sad, confused, excited, nauseated. Give me a word, especially somebody who's never seen me teach before. Um, Okay, cool. Sounds like it's good. Jackie's just okay. Jackie's not great. Monette's a little intimidated. So Monette, why don't you email us? I want you to like feel good about QuickBooks and feel good about accounting. Okay. So you can watch this later on and review it again. I thank you so much for coming. Oh, thank you, Christina. I really needed that today. All right. So, is Aretha still here, or did those guys have to leave? I
Still,
know. Go ahead,
still,
Aretha.
I'm still here, Greg.
All
Greg,
right.
don't
I'm
turn
gonna tr-
it.
I'm gonna turn it back over to you. I know that there's Justin kept saying that there is a poll that they're very interested in y'all answering. Is that
Yes,
right?
yes. As soon as everyone leaves Zoom, it's gonna pop up on your window. Please take a moment to fill out. It's only 3 questions. Greatly appreciate it.
If you, Virginia, I would look at QuickBooks Made Easy if you're looking for a course that you can take online. If you go to courses and training and go to complete training courses, there's something here called the bundle, and it teaches you everything you need to know about accounting, QuickBooks style. The course is normally 400, but we're going to give you a discount for that as well. We're going to give you $100 off. It's TS298 is the code to get that. All right. All right. So I think I'm going to, since we're 9 minutes over, as usual, right, Aretha? Uh,
Yep.
uh, I'm going to turn it back over to you to finish out. We'll listen to some music for a second once you tell me it's time to stop.
Actually, yes, I'm going to say thank you so much, Greg, Paige, and Bill in the background, and of course, Justin. And I'm gonna close this out. Have a great day, everybody.
All right. See you later.